So you should now be seeing the daily chart of the Aussie dollar, which, as I mentioned, it's clearly showing a move up, a continuous move up, and so that's ideal for our technique to work. Now, what I'm going to do is I'm going to now switch over to the 60-minute chart and show you exactly how to implement this moving forward. Okay. Well, let's take a look at the most current view of Aussie dollar. Okay, the most current view. And let me zoom that in a little bit. And let's start the measure. Okay, so very simply put, I'm going to draw my line. This is my trend line. Okay, and then I'm going to start to measure first from low to high. So from low to high, rather. Okay, so this would be, hold on, let me just find that. This would be about 0.8123, this low, 0.8123, and the high would be about 0.8302. So that's clearly more than 60 pips. So that is well above the requirement for this technique. So fantastic. Now the next thing that I want to do is I want to measure the distance between this low and that low. So I'm going to now draw my horizontal lines, 1 and 2. Now to measure that, you simply look at the price. This first line, okay, let me draw this. Let me highlight this. This first horizontal support line is trading at about 0.8239. And then this lower support line is trading at 0.8124. So that's clearly more than 30 pips. So we're good to go. So this is more than 60. That's more than 30. We're okay. So let me show you by labeling it first. Sorry. Let me show you by labeling it first on how it would look like on the chart. So let's assume that I bought here. I would simply put a buy order here, a market order to buy. Then about 10 pips below this line, or 0.8239, I would place a stop order for that buy. And then, of course, I would go with limit 1. And higher than that would be limit 2. Okay? So clearly, since we have the luxury of hindsight, we've really made this. But if this did not happen, the stop and reverse order would look like this. Where I placed my stop, exactly where I placed my stop, I would place an entry order to sell. And then I would put my stop order for this entry order right where I put, or right where I bought. So this is where I would put my entry order stop. Okay? Then what I would do is I could put a entry order limit before this second line is hit. What happens now is this. If the price did not go up, if I bought here and the price started to plunge, I would get stopped out. But I would now be entered again, and I would now start to try to make money when the market starts to plunge downwards. So that's the point of this. This is your monster trend safety hedge, or your stop and reverse hedge. And that is what makes this technique worthwhile. Because if, for example, and going back, right? If, for example, we were looking at this, going back to the daily chart, and, oops, sorry, let me remove these. There you go. And the price was continuing to go up, and we were afraid that if we bought somewhere here, that it would start to correct wildly, then that's not an issue anymore, simply because we have a stop and reverse hedge for us. That is the reason why you would like to trade on a daily chart basis if the price is continuing to move up or down, and the momentum is still with that. Now, at this point, let me tell you, the momentum is clearly on the upside. For the past few weeks, I have been waiting for a correction to happen or a breakout to happen. And I think this week is really going to be a breakout week for everyone. And that is the reason why we're going to go with this technique moving forward. Because when the price breaks out, it usually continues to move up. Let me draw that. It continues to move up. And then when it corrects, it corrects. If it does correct, it may correct until here, the original resistance point, and then starts to move up again and again. Now, looking at the daily chart, that might take a while. So therefore, I'm teaching you guys now how to use the monster trend technique. Okay, let's do some more back testing. And this time, I'm going to go back and I'm going to do a live, well, not live, I'm going to do a 60-minute as if we were trading today. And let me show you how to implement that exactly. So at this point, on your screens, you should be seeing my chart once more. This is my AUD USD 60-minute chart. And I'm going to now do backtrack testing. And I'm going to go back all the way here so that you can see how this technique works, right? Okay. Okay, let me zoom that in. I'm going to go for a stretch of charts here. And this is what I'm going to do. I'm going to start by drawing my line. So let's say this is what I'm looking at today. Okay. Okay, let me fix this a bit. Hold on. Okay. Very good. So this is what I'm looking at today. And let's say I'm not trading this because the price right now, let me highlight this. The price right now is over here. Let's assume that this is the price right now. So I'm drawing my line, and what I'm doing is I'm waiting for a bounce on a 60-minute chart. Okay, let's go. And move forward. Okay, so as you can see, the price is moving nearer the support line that I drew. Now I'm waiting for a bounce. So let's see if I bounce. That's a hammer. I need one more confirmation. Nope, unfortunately it started to go down, down, down. So this is a no trade for us. Okay, so let's not go that way. Now you see that there's a bounce here. So what I'm going to do, I'm going to correct myself and then try to implement this technique right now. So I'm going to draw my line again, this time connecting this, right? Then what I'm going to do is I'm going to draw my horizontal line immediately, 1, and then right below that is 2, somewhere there. Now this is what I'm going to be looking at now. Let's measure if we're doing this correctly. If I were to measure it from here, from this low, sorry, let me highlight this, from this low to that high, that's clearly more than 60 pips, okay? But let's not do it that way. Let's be more conservative. Let's measure it from this low to that high. Let's see if we can make that. So this low is around 0.7931. This high is about 0.8030, if I'm not mistaken. Yeah. Okay. 0.8030. So this is okay. It's more than 60 pips. Now let's measure this horizontal line to that horizontal line. So this is 0.796 and that's 0.793. That's just 30 pips. Fantastic. So it fits our description and we can now start trading that. So I'm going to now label that. So I'm assuming I'm going to buy here, market order to buy. And then about 10 pips below this horizontal line, I'm going to put my market order stop. Then I'm going to put my entry market order limit. And that's limit 1. And probably here on the top side, I'm going to put my limit 2. Okay. There you go. Now, we're not yet done because we now have to place an entry order